Hello everyone. Today we're going to present to you our business project, which is going to be about a familiar product for each and every one of you, hats. And it's going to be located in Blagoevgrad. First of all, our team is myself, Stancho. This is David. We also have Nikola and Tanya. And I will start our presentation by talking a little bit about the market. So, Blagoevgrad, as you all know, has a population of approximately 70,000 citizens, from which around 20,000, let's say, are teenagers. As well, we also have additionally approximately 15,000 students from the two universities, which basically makes a great market for our product, which, as already mentioned, are hats. We aim at gaining a market share of about 1% of the young population, and hopefully we will be successful in this. Therefore, the one population makes of around 300 hats sold per month. The price we estimated that should be around $10 to $11 with the option of making promotions, therefore decreasing it to around $9 in the beginning. Our initial investment we estimated should be of around $3,000. This should include 2 sewing machines, which will be bought at around $100, as well as 2 desks and hat blocks. The hat blocks are used in the production of the hats. We will also need laptops and additional equipment, which also includes felt, peaks, straps, and so on and so forth. We will need labor, which will constitute 2 people working 5 days a week, 8 hours a day. And we also estimated that it will take around an hour to create each hat. Our overhead will also include glue and stiffener, as well as office rent and bills. We will also be managers of the company, and therefore we will be paying ourselves a monthly salary of around $3 per hour. And moreover, we'll be promoting the hats through social media and also the distribution of flyers. The flyers actually will serve as a discount coupon in case it is presented at the time when purchasing the hat. We estimated that the final cost per unit will be around $4.5. Therefore, the selling price of around $10 we believe is going to be reasonable.
Okay, thank you, Stansha. Now I will tell you a little bit more about break-even analysis which we made for our project. So our break-even analysis shows that our company will be operating with a break-even quantity of around 170 hats per month, leaving us with more than 45% margin of safety. This should eventually prove useful for our company, since we are producing an item for which the competition is very high in the elastic section of the demand. This comes to say that small changes in the price will affect the quantity demanded by a lot, thus allowing us to decrease prices through the promotions already mentioned and increase the demand and sales of our product. At the same time, due to the low fixed costs that our company has, we will be doing fairly well during bad economic times, because with the decrease of sales, so we'll decrease our variable expenses. This we obtain from analyzing the cost structure of our company. Thank you.
Thank you, David. That was very important and useful. Break-even analysis is always a key aspect of every business pursuit. And now Tanya is going to tell us a little bit more about the feasibility of the project.
According to our budget, we will most likely be selling less hats during the first and second quarter, resulting in a net loss for that period. However, as our marketing campaigns across social media make people aware of our new brand, sales should increase and gain momentum. Moreover, the distribution of flyers can be accompanied with a promotion for those who present the flyer at the time of the purchase. In this way, for the first 2 quarters, we can increase the popularity of our product by selling it at $9 per hat. As mentioned, this will result in a net loss, but according to our predictions, the increase in sales will allow us to stop the promotion, thus ultimately making a profit for the second and third quarter. In case sales are not doing as well as planned, we might keep the promotion going during the third quarter as well, which would still yield some positive profit at the end. Ultimately, we have planned to have working capital of approximately $2,000, which we consider will be sufficient for the needs of the business during the hard initial period. Therefore, although we will most likely not be able to avoid any net losses during the first year, the capital and the sales together should be enough to keep the business stable.
Thank you, Tanya. It is also very useful to know whether the project is plausible or not. But guys, what is going to happen if something goes wrong? For example, if sales drop or something else? Nicola, can you tell us something about that?
Thank you, Stancho. To make a deeper analysis, we decided to plan for some changes in the budget as well. In case sales are initially lower, say 400 for the first quarter, the initial working capital will be essential for our business to withstand. However, due to our marketing campaigns and to the fact that we are targeting only 1% of the young population in Bogorograd, we could consider it reasonable to rely on the prediction of sales around 600 to 700 heads per quarter until the end of the first year, which would yield enough net income to remain competitive and solid. There is another important aspect that I want to mention as well. We are planning to use process costing method, according to which we do not stop our production throughout the year. As it can be seen from the budget, changing our sales do not actually affect our production. Therefore, direct materials, direct labor, manufacturing overhead, and selling and administrative expenses, our inventory in this case consists of those heads that we did not sell during the quarter, so we have to store the heads somewhere, and it's a good idea to store them in the office.
That was very interesting, but there is some other thing that I forgot to mention. Another prediction that we made was a 5-year forecast. According to the budget, for those 5 years, sales will most likely increase, causing inability to handle demand with current production. This would require hiring an additional worker and increasing some variable expenses as well. As a matter of fact, we might even have to expand our business by renting a larger office. Nevertheless, due to the increase in revenue, our profits will increase gradually over time. What is more, we made a differential analysis by taking into account the possibility of buying another, better machine. In case we buy the more expensive one, the quality of our hats would improve, thus increasing annual net cash flows. Moreover, salvage value and savings from depreciation will rise. However, since we have accounted for taxes, and as already mentioned, we do not operate in the elastic section of the demand, the differential analysis shows that it would not be profitable to buy the more expensive machine. Therefore, the slight increase in sales will not be sufficient to cover the expenses, thus ultimately resulting in a negative net present value for our investment. The reasons for the negative NPV are many. For example, that hats are a highly competitive product, and striving for highest possible quality does not always yield higher profits.
Okay, well, thank you everyone for the thorough analysis. By the way, what is the name of our product?
Hey, I think I got it. How about cappies?
Cappies? Okay, well, I guess sounds fine. Well, I hope investors are gonna be interested in our company. I bet they will. Thank you everyone for the analysis.